Ever felt like you're stuck in a financial catch-22? You need a loan to improve your situation, maybe for education or refinancing existing debt, but to get that loan, you need, well, better finances. It's frustrating, right? You're not alone. One of the biggest hurdles many borrowers face is the need for a cosigner. And if you're exploring LendKey as a potential lender, you've probably asked yourself the same question: do I need a cosigner for LendKey loans? That's exactly what we're diving into today. We'll break down how cosigners work, when you might need one with LendKey, and, most importantly, what your options are if you don't have someone readily available to cosign for you. First, let's clarify what a cosigner actually does. A cosigner is essentially a guarantor for your loan. They're legally obligated to repay the loan if you, the primary borrower, fail to do so. This significantly reduces the lender's risk, making them more willing to lend money to borrowers with limited credit history or lower incomes. Think of it as having a financial safety net in case you stumble. Now, LendKey isn't a direct lender in the traditional sense. They're a platform that connects borrowers with credit unions and banks. This means the specific requirements, including the need for a cosigner, can vary depending on the lending institution you're matched with. There's no blanket yes or no answer for LendKey as a whole. So, when might you need a cosigner when using LendKey? There are a few key factors that lenders typically consider. Credit history. This is a huge one. If you have a thin credit file, meaning you haven't had much experience with credit, or if you have a low credit score due to past credit issues, a cosigner can significantly improve your chances of approval. Lenders want to see a history of responsible borrowing, and if you don't have it yourself, a cosigner with a strong credit history can provide that reassurance. Income. Your income plays a vital role in demonstrating your ability to repay the loan. If your income is low relative to the loan amount you're requesting, a lender might require a cosigner to provide additional financial security. They want to be confident that the loan will be repaid, and a cosigner's income adds another layer of protection. Debt-to-income ratio, DTI. This is the percentage of your monthly income that goes toward debt payments. A high DTI indicates that a large portion of your income is already committed to other obligations, making it riskier for a lender to approve a new loan. A cosigner can help offset this risk by demonstrating a lower overall DTI for the loan. Type of loan. The type of loan you're seeking through LendKey can also influence the need for a cosigner. Some loan types, such as private student loans, might be more likely to require a cosigner, especially for undergraduate students who are just starting out and haven't built much credit. Let's illustrate this with a couple of examples. Imagine two students applying for private student loans through LendKey. Student A has a solid credit history from responsible credit card use and a part-time job that provides a steady income. They likely won't need a cosigner. On the other hand, student B is just starting college, has no credit history, and only minimal income. They're much more likely to be asked for a cosigner. Now, what if you don't have someone who can cosign for you? Don't worry, it's not the end of the road. There are other avenues you can explore. Improve your credit score. This is a long-term strategy, but a highly effective one. Even small improvements to your credit score can make a big difference. You can do this by paying your bills on time, keeping your credit utilization low, the amount of credit you're using compared to your total available credit, and checking your credit report for any errors. Increase your income. If possible, increasing your income can strengthen your loan application and reduce the need for a cosigner. This could involve taking on a part-time job, asking for a raise at your current job, or exploring other income-generating opportunities. Look for alternative lenders. Some lenders specialize in working with borrowers who have limited credit history or lower incomes. These lenders might have different criteria and be more willing to approve loans without a cosigner, although they might also charge higher interest rates. Consider secured loans. A secured loan is backed by collateral, such as a car or a savings account. This reduces the lender's risk, making them more likely to approve a loan even without a cosigner. However, it's important to understand the risks associated with secured loans, as you could lose your collateral if you default on the loan. Focus on federal student loans. If applicable for students, federal student loans are often a better option than private loans, as they don't typically require a cosigner and offer more flexible repayment options. Prioritize exhausting your federal loan options before turning to private loans through platforms like LendKey. It's crucial to remember that each lending institution on the LendKey platform has its own specific underwriting guidelines. What one credit union requires might be completely different from another. So, the best way to determine if you need a cosigner is to pre-qualify with LendKey and see what offers you receive. Pre-qualification allows you to see potential loan terms without impacting your credit score. This gives you a clearer picture of your options and whether a cosigner is likely to be necessary. In summary, whether you need a cosigner for a LendKey loan depends on a variety of factors, including your credit history, income, DTI, and the specific lender you're matched with. If you find yourself needing a cosigner and don't have one available, there are alternative strategies you can pursue, such as improving your credit score, increasing your income, or exploring other lending options. Always pre-qualify to understand your specific situation and explore all available avenues before making a decision. With that said, thanks for watching, and until next time.